Right. Good morning, guys. So today we're just going to go over some terms that I feel are very important to know. There's a lot more than this bit. We're just going to get into it. So first one on top, we got annual report. So an annual report is basically every company has one. This is kind of how they razzle dazzle you. It covers the company's money, what they're doing, their cash flow, management strategies. In addition to that, it also has financially where the company is, like what they have so far, what they don't have so far, and if they're taking any losses. So annual report, this is where they really try to win you over. Next, we got bear market. So bear market, basically when the stocks are down, when everything's red. We got blue chip stocks. These are typically, like I said yesterday, the S&P 500. I'm going to show you guys later examples of that. So blue chip stocks are primarily large industry leading companies like Apple, Google, Disney. That's what they are. They're like, I guess, like the expression is like it comes from like blue gambling chips, which are the highest denomination of chips used in casinos. So that's why we refer to them as blue chip stocks, because they're like big time companies. They're not like little time. We got bull market. Bull market's when the market's green, when it's going up, you're not taking any losses. So when the market's down, you'll say, oh, today it's bearish. When the market's up, you'll say it's bullish. We got brokers. So back then, a broker is Wolf of Wall Street. So kind of like Jordan Belfort, the guy, the middleman in between you and your stocks. So you choose some stocks, you call him up, or her, mostly him actually, and they will kind of connect you to how many shares you want. Nowadays, we got a lot of online brokers, Fidelity, E-Trade, ATD, Ameritrade, or AD, Ameritrade, I forgot. We're going to go over that later. So brokers are where you buy and sell stocks, what platform you use. Now you don't really have to go and call some guy in New York anymore. You just pretty much do it all on your own. There is people who have a service where they do it for you and you just pay them a monthly fee. It's really up to you how you go about it. We got bid, which is basically kind of like the amount of money a trader is willing to pay per share of a given stock. So it's kind of like the price tag. Next, we got capital. We're not talking about the capital of a country, a state. We're talking about capital as money. How much money do you have in your arsenal? So if you only have to invest as $100, your capital is pretty much limited to $100. Now, I like the metaphor a friend used. Imagine every dollar you have to invest is like a soldier, right? So you got an army and you're going to try to take over something, in the sense that you're going to try to profit off of it, right? The more soldiers you have, the much more powerful and more effective your army is. So just kind of have that mentality with money. Every dollar counts. It really does. So next, we have day trading. So day trading is pretty much trading on a daily basis when the market is open till the market closes. It's the practice of buying and selling within the same trading day. So since we're here in California, I'm going to go over more into depth into this later, but here in California, the stock market opens at 6:30 a.m., closes at 1:30 p.m. We're based on New York's time. So, time zones, 4 time zones away. So that's all day trading is. Now, really quick, like I said, I'm going to talk about this later, but the same way you would sit in a casino for a long period of time, you're more likely, statistically, to lose more money, right? If you put in $5 and you made 20 in a slot machine, the smart thing to do is walk away. If you made, $100 right now on blackjack, the smart thing is to walk away. Don't sit down any longer. But most people, because of human instinct or whatever you want to call it, we just like to play and we think we're on a winning streak and we're just going to win more, but that's not always the case. So day trading is very risky. At the same time, it is risky. It can be hella profitable. So it can go both ways. So just bear that in mind. Next, we got IPO, initial public offering. So when a company goes public, so let's do Snapchat. I think it went public 2016 or 17, I forgot. But their initial public offering was offered at $16. So the moment that stock goes out into the world, becomes a new company, they go public, they give their IPO. Let's say, let's not say they did. Snapchat did $17. $16. I remember. They said, yeah, let me check it out here. So let's check it out. Okay, yeah, so it was like $17. Let's check out where it is now. So you don't always have to put the ticker symbol. You can just write the whole word. So today they're at 16. Yeah, not too much growth. Year 16. Yeah, not a really good stock in my opinion, but that's something we're talking about today. So that's an IPO. It's just the first time whatever a company comes out and they say, hey, this is how much we're starting at, and from there on it can go up or down. Portfolio. So basically your portfolio is your collection of investments, whether it be stocks, real estate, gold, mutual funds, anything really. It's just a portfolio of everything you got your money in. That's all it is. That's it. Funny thing enough, you're gonna have a lot of people that are gonna critique you on your choices of investments, and my advice for these not nice people, ask them straight out, can I see your portfolio? Could you share your portfolio with me? And most of the time, I'm not going to give you a statistic, I don't know, but most of the time, they're not going to have one. I mean, sorry, I got to drink water, stay hydrated. I've had people tell me, oh, don't invest in Tesla, that's so bad. I've told them straight out, well, or they'll give me like an alternative. They'll say like, invest in this company or this real estate, or invest in this marijuana stock. And I had a lot of people tell me that, or invest in Bitcoin. And I'm just like, well, can I see your portfolio? If it's true that I would make money, I want to see it for myself from someone that's actually invested. I don't want to just look at a graph. And most of the time, the people, actually every time, every person's told me they don't have a portfolio of anything. They're just reading news and regurgitating what they heard like a parrot. So yeah, so be very confident in your choices of investment and what you choose to put in your portfolio. If you're a guy that likes cars and you just want to collect car stocks, do it. If you're a person that likes entertainment companies, Disney and all these other places, then do it. Or if you're someone that's smart, you'll diversify. You'll be in different industries like technology, communications. Fashion is very iffy. Industrial is really good. War is pretty good. Food is pretty good, or not food itself, but like distribution, stuff like that. Things like that. Gold, metal. Social media is pretty good, like Facebook. It's a pretty good one. So make sure your portfolio is very diversified. So it's just a collection of stuff. So next we got stock symbol, or also referred to as a ticker symbol. It's a 1 to 4 character alphabetic root symbol. So like Apple's is AAPL, so it's 4. So it's 1 to 4 characters long. Google is GOOG. Coca-Cola is KO. Starbucks is SBUX. So it's just 1 to 4 characters. That's pretty much it. Walmart is WMT. You just start remembering these like crazy. It's funny. But yeah, that's all a stock symbol or ticker symbol is. Next, we got volume. Volume is the amount of people that are trading at one given time. Excuse me. So basically, it's the number of shares of a stock traded during a particular time period. It's normally measured by the average daily trading volume. So yeah, it's just how many people are actually buying and selling at one given point. That's really it. Next.
Stocks and shares. Stocks refer to any company, while shares refer to a specific company. And the way these two work are kind of synonymous of each other with small differences. It all really depends on language and how you use them. So for example, if you say I have stocks, you're basically saying you own or you have part ownership of a company. And it could be either one company or multiple. It's very vague. When you say I have shares, then the question becomes, well, of what company do you have shares of? So stocks is very in general, you have stocks of multiple companies or one. Shares are specific to one company.
So I'm gonna leave you guys with some homework. So I want you guys to Google S&P 500. You could just Google it. You could go on Wikipedia. So this is the list of the S&P 500. There's many websites. I'm just Wikipedia. It's just the fast one. So this is all 500. Some of these you're gonna recognize. Adobe. What is that? It's auto parts. Some are small companies, but yeah, we got Google, obviously, American Airlines, Amazon. Yeah, I was looking for that one. ABC, What's another one? Apple. Let's go out of the A's. CBS. Let's go. eBay is on here. It's going lower. I don't recognize. Oh, Hasbro. Recognize this one. So a lot of these things do. Oh, McDonald's. Yeah. I had McDonald's for a while. Starbucks, obviously SBUX, and it's cool because you can look at the ticker symbol and start remembering them. So this is it. So just have fun with it and investigate companies. Look at them. Wells Fargo on here. Just look at them. A lot of these pretty much you deal with on a daily basis, unknowingly or knowingly. So there's a reason why they're on here and why they're the 5 leading in this country. So no, that's not Snap. Yeah, Snapchat's not on here just because they suck. No, I have nothing against them. They're not a good thing to invest in. They were maybe like early this year, but now it's very stagnated. They've kind of plateaued a bit. But yeah, so that's about it. Check it out. Investigate S&P 500. So these are going to be some words that I feel you should start off with. There's going to be a lot more words to come. And next time we'll see if we can look into brokers and how to choose stocks.